let's spin the wheel here. NUA distribution. Explain what NUA is.
There's two ways that we typically look at taxation on appreciated assets, right? When we look at the first one that people are most common, they deal with is 401ks, right? You put money in, it's tax deferred, right? When you roll it out, right, you roll it to an IRA, you're taxed at ordinary income on that appreciation when it comes out.
So let's just give an example. You work for a company where you own company stock in the 401k. You paid a certain dollar price for that stock. That's your cost basis. Now, typically in an IRA or a 401k, cost basis does not matter. However, when it comes to net unrealized appreciation inside of a 401k, cost basis is critical. So if you, and let's say that over the years, you paid $100,000 for the company stock, and that company stock is now worth $1 million, you have net unrealized appreciation of the difference between the million and the 100,000. So $900,000 of net unrealized appreciation inside the 401k. If you do nothing with that and you ignore it and you just roll it over to an IRA and invest that money to generate income, every dollar that comes out is then taxed
at ordinary income. Yep.
Now, what is your ordinary income tax rate? Well, that depends on all of your sources of income. So NUA, or net unrealized appreciation planning, isn't always a yes.
Correct.
Sometimes it's a no, depending upon your actual tax bracket. NUA says, hey, what you're going to do is, instead of rolling that stock into a IRA, you're going to take the stock in kind, and you're going to pay ordinary tax on the $100,000
that you put in.
But the $900,000 of net unrealized appreciation, it's not taxed until you sell it. And then when you sell it, it's taxed at a long-term capital gain rate, which today happens to be a maximum of 20%. And there's ways that you can get capital gains at zero, right, if you do some proper planning. So NUA gives you an opportunity to take that stock and maybe get it at a more favorable tax rate.
Is it's really going to be circumstantial to your scenario?